Clearly, the market has been in a bit of a trading range over the last 2 weeks, but I want to get your thoughts on asset allocation in the light of the results we've seen recently. Q1 numbers, of course, from the banks were the main talk of the market over the say the last 2 to 3 weeks. But give us your thoughts on how that is impacting your allocation to equities today.
Hello, Wole. You're absolutely correct. We've seen fantastic results from the banks especially, and I think something that has been lacking over the last 3 to 6 months is a strong string of positive flow of results, and that's why we continue to see a situation where there are undervalued stocks in the market, but investors are not really aggressive towards picking them up. But now that we've seen this string of positive flow of results, we are now seeing some reasonable appreciation in the market. With respect to our asset allocation, we are value investors. We invest based on fundamentals, and we look to a medium to long term horizon when we make those investments. So in reality, our asset allocation has not really changed from what it was prior to Q1, despite the strong results, because they are not entirely strange to us. We had expected that we will see a rebound following the cleaning up of the NPLs of the banks in December. So really, our asset allocation still broadly remains the same. For our equity bias portfolio, we're still quite bullish. And then for other portfolios that are conservative in asset allocation, we try to stay somewhere around the middle belt of the asset allocation range. That's basically how we're positioned right now.
Okay, but let's talk a bit about that fixed income allocation. And clearly, inflation is something that you think about a lot when you're looking at fixed income investments. Give us your thoughts on how you are reading the inflation numbers that were out recently this week. Of course, April inflation is up to 12.9%. The broad expectation is that inflation is going to tick higher over the next few months before coming down later in the year. How do you play the fixed income market in the light of this?
I think from our own perspective, what we try to do with the fixed income portfolio is to kind of layer the portfolio such that such funds that are required for liquidity purpose, we try to keep them more in the short-term investments. And so we've kind of taken advantage of the rally in the T-bills segment of the market over the last 6 months thereabout. But with respect to the bond allocation as well, I think that right now where we're seeing on the run FGN securities trading at over 15% for the 3, 5, and 7 years, I think it's a good time to actually be adequately invested in bonds, despite the fact that the expectation is that inflation will still go up slightly more between now and say July, and so you'd expect that the yield as well on those fixed income securities will still inch up slightly. But I think that except if one is almost fully invested in terms of your fixed income asset allocation, one should actually be proactive to move at a time like this to buy more of the long-dated securities so that you can also minimize your investment risk when rates begin to decline.
All right, let's touch on your thoughts on the Nigerian macro story. Clearly, FX reserves are up to $37 billion, which is a 21-month high. But on the downside, we saw the Naira come under a bit of pressure this week. It's clearly gained a little bit today, closing at 158.85. Well, your thoughts on that story? Clearly, that's the story that people always talk about, the Nigeria story, the growth story, 7% plus GDP growth. Are you still convinced in that story, given especially the slight weakness which we've seen in the Naira?
I think the weakness we've seen in the Naira can be really classified as a blip. We've seen the FX reserve rally strongly to a 21-month high, like you said, and with outlook for GDP also very strong at 7% thereabout. Nigeria still remains one of the fastest growing country in the world, and so we are still very, very bullish about that macro story. We think that the reason why we've seen some pressure from the information we are getting with respect to the FX rate is because quite a number of companies are repatriating the dividends. You know, the results have just been released, and so right now most companies are paying dividends. And so I think quite a number of companies happen to have come to the market about the same time to actually raise funds to repatriate the dividend. That's why we've seen that pressure. But CBN has been able to show clearly to the market that they are able to maintain the rates around where they are right now, and we don't really see any significant risk down the line that should affect the growth story. What we would like to see, obviously, is more of disciplined fiscal management from the fiscal authority side, and as well some significant investment, quality spending in infrastructure. And as we see those kind of things, we think that the economy would pick up stronger, and as well other investors looking at Nigeria would then find the story even far more compelling than what we currently see now.
All right, Jide, a quick point on the MPC next week. Give us your expectations. I think the market is expecting that rates will be maintained at 12%.
Absolutely. There's broad consensus in the market that the policy rate will be maintained around where they are right now, because CBN had also signaled earlier in the year that they expect that at about middle of the year, the inflation rate will peak at around 14%, 14.5. So what we have seen with the increase in the inflation number is not unexpected. So we do not expect that the monetary authority would fiddle with the rate in the upcoming meeting next week.
Yeah.
We think that if at all anything will be required, perhaps we might see more active involvement in the OMO, so that CBN can use that to mop up any perceived excess liquidity in the system. But
Right,
broadly speaking, we don't expect any change in the upcoming meeting.
All right, Jide, thanks so much for joining us. Jide Allo is investment manager at Stanbic IBTC Asset Management.